Welcome back, and joining us at this hour is Shivangi, Sarda, technical analyst at Motilal Oswal. Shivangi, great having you. What do you make of the move, Shivangi? What's that quick shift in terms of the candlestick midway through the day? What's played out? Is it expiry day? Can it sustain till tomorrow? How do you read into that pattern?
Very good afternoon. Thank you for having me. So we've seen that the indices have witnessed a roller coaster ride from the start of the session. After the gap down opening, we witnessed some bit of recovery and then again profit taking over. Again, the last hour has seen good amount of buying in the coming back of the bulls. So overall, a tug of war has been there in the market. Between the bulls and bears. And of course, yes, we are seeing some of the FIs buying in the short covering trigger, which has played out well. But we are still seeing call writers at 24,000, which are quite sticky at these levels. And those will require unwinding for the next leg of rally to sustain at these levels. For the support, we're looking at 23,300 marks as an immediate support base for Nifty. So, of course, buy on decline, but intraday swings will be present and cannot be rolled out.
The market having enough strength to end above the 23,500 mark today?
So 23,500 is, just like about 40 points away. But I'm kind of, seeing some bit of settlement happening over here as well. It is likely to close near 23,500 marks. Of course, the expiry play volatility will play out in the last, half an hour.
Okay. What we'll do is slip in a very short break. Shivangi will come straight back to you. Take your picks in a market like this. Very interesting. Also, have your view with regard to IT as a pack. What a move from IT over the last couple of days. Let's restock once we're back. Stay with us.
Welcome back. You're watching Closing Trades, and we're into the last 30 minutes of the trade, and especially the expiry trade at this point in time. Joining us now is Ajay Bagga. Ajay, hi, morning. How do you look at the IT recovery, which we have seen for last 2 days?
Well, we'll have to see it being more sustained, Sajid. Right now, it's more some bottom fishing that we are seeing. Overall, if you see, the AI impact is very much there. In terms of use cases of AI, we have not seen a very big traction. So the normal BAU SaaS kind of work is continuing. That guidance has been okay, not very strong, but the AI impact has to be seen. It's more some amount of bottom fishing that we have seen. Some buying has come in because the valuations have kept going down. But will it sustain is the major question. And for that, earnings visibility is much needed. So I would say time to wait this out rather than rush into the IT trade.
Let's listen to what Vikram Sahu has.
Curious, technically, IT was extremely lethargic, extremely boring for an extremely long period of time. Does anything change now?
Of course, IT has been one of the most laggard counters or sectors for the current time being. But overall, I'm looking at some of the mid-cap IT space stocks which are now showing good amount of strength. Coforge has been on my radar, which has shown bottoming out structure. But again, this will be a very short covering trigger move to be captured here because the entire IT space is in a little bit of a pressure in the long term. So we could capture the immediate term, on a trading cycle. But of course, investment, I would still recommend to stay out of it. Immediately, Coforge, one can look at 1600 levels with a support of 1500 zone.
LTI Mindtree came out with its analyst day deck, and what they've said is they're aspiring to double revenue by FY31, Ajay. And very interesting take, double revenue by FY31 and expand EBIT margins by 200 basis points from 15.4% to 17.4%. That's tall in terms of the ask, but that's really the highlight of what's come out from that commentary from LTI Mindtree. That's their Laksh FY31. And I'll try to run the numbers very quickly on what that means from a PAT and PE perspective by FY31. But Ajay, I know that you're saying wait and watch, but are there certain pockets within this IT basket which look relatively more interesting, which are largely insulated from the AI trade core, which is not at its very core IT services, but could be ER&D or could be certain softwares which have deep moats even despite AI? Would that be something which could look interesting?
Yeah, definitely. Definitely, there are pockets, especially the companies getting into, say, the hardware part, the semiconductors part. Again, we don't have listed companies directly available. You have to play proxies. Companies setting up data centers, companies supplying power into these data centers. I think these will be natural beneficiaries of the AI rollout. For our SaaS companies, what we have to see is the end use coming through and gaining traction. Now, what that is the difference between the big US companies and the Indian IT services companies. We have not seen that AI rollout traction coming through yet. So, of course, the staff has been retrained. They have a lot of case studies ready where they can implement it. But we are waiting for those orders to come in to really then bolster the case that there is a pivot happening on the Indian IT services. The natural IT services zone is under threat from AI because there could be a lot of automation, there could be a lot of digitization, and even elimination of some of those tasks that they get paid for because of AI stepping in. So it will not take away legacy software. If you are running a bank, you will not hand over the bank software to an AI play. You will stay with your legacy software provider. So we are not saying that they go out of existence, but the growth came under pressure, and that's why the market has valued them at a lower growth rate. Now, where we are at is we are saying that we have seen 2 years of a lot of debate around this, a lot of time for them to reject their models. Are the models coming through now? I think next 2 quarters will give us some clarity on that. And moment you see growth coming in on the AI end use implementation, then you could see a re-rating of Indian IT. Is this the move? Is this move the precursor to it? I'm not very sure, Harsh. We don't have enough data to make that. So is it just a bounce from very low levels? I would say more that rather than a fundamental shift yet coming through.
I'm going to ask you one more follow-up on this and another argument maybe. Every IT company has come out and suggested that we will make the pivot. So you're saying don't believe them, wait and watch.
No, they've been saying that for 2 years. So,
yes.
You have to really see the numbers.
Right.
So numbers are not bearing that out. You see the big US companies, the way their cloud services are growing, the way their reported AI numbers are growing. We are not yet seeing that traction. So I think that is the only thing. We believe them. These are excellent managements, very well-run companies. They throw off a lot of cash, but that was 2000 to 2025. Now you're looking ahead for the next 2 decades. How does AI play a role? Are they going to be victims of AI or are they going to ride AI? I think that's the big question, Harsh. We don't have enough answers, enough data right now.
Your point entirely. LTI Mindtree, Saji, doubling up revenue by FY31. That'll take revenue to around 84,000 crore, market cap at 1.3 lakh crore. the EBIT margins, which are at 15.4% currently, to go to 17.4%, which will mean maybe 14,500 crore of EBIT that they will do in FY31. And if I add 1,000 crore of other income, reduce interest expenses and taxes, that gets you to 11,500 crore of profitability versus sub 5,000 crore of PAT right now.
Doubling of PAT basically almost.
More than doubling of PAT. So maybe 1.3x, 1.2x maybe of PAT, of current PAT.
So the kind of growth they're looking at is plus 20% basically.
Yeah, 120% growth on PAT. Yeah, so approximately 20% growth on bottom line. 18% growth.
18 to 20% growth.
That's what they're guiding for. That's what they're guiding for, viewers. So essentially, that's the ballpark that you play with, and it currently trades around 24 times. So that's really on LTI. But Ajay, so let's digress. Let's get out of IT. You've spoken a bit about IT. What else are you liking in a market like this? Pharma, for example, has done very well for itself. Have we run ahead of ourselves, or is there scope for further upside? Is there a view you have?
No, pharma is evergreen. Again, pharma is 5-6 segments within it. So it will continue to do well. But, for last 3 months, I have been cautioning that given the geopolitical overhang, it will be very difficult for an energy-dependent market like India, an imported energy-dependent market like India to outperform. And that has got borne out. Pharma, again, normally in a time of, crisis, in a time of event-based issues coming into the markets, the pharma tends to stand out. It is held up well. It is, in India, the difference is we have a cost advantage and it is a growth sector. It's not only a defensive sector. Plus, it benefits, being an export-oriented sector, it benefits from a weaker rupee. So it checks a lot of the tick marks. And I would say, yes, pharma remains a strong sector to invest in for an Indian investor.
Shivangi, how do you look at some of the pharma stocks like a Bagga, which has been, buzzing for the last couple of days?
So in the entire pharma space, of course, Wookhardt has done quite well, but my eyes are on the diagnostic space stocks. Apollo Hospital has been on radar, which has shown a very good amount of short covering today from the lower levels. It is up by around 10% nearly. And we've seen that, the overall momentum in this stock has been quite well. And this one's a definitely, short-term as well as a long-term pick. Immediately, we're looking at 8,400 levels with a near-term support of 79.30 levels.
Any picks that you have, Shivangi, today?
So, PTSD ideas, I would like to look at PBL, which has shown a consolidation breakout on the daily frame. We've seen that, VBL has been resilient from the last few weeks, and even in the May month, we've seen that this stock showed a fairly good amount of follow-up after the breakout on the monthly basis. So this one's on radar for the next target of around about 558 levels and a support of 525.
Okay. Shivangi, I wonder whether there are any favorites within that pack that you have.
Yes, of course, defense has been on my radar since a long time. We've seen a little bit of profit taking of the highs, but HAL has been one of the most resilient names in this one. Of course, it has given up strength from the last 4 sessions, but overall, this one is picking up right from the bottom, and we could look at this one. Apart from this, I think some of the other stocks like BDL could also be kept on radar.
Okay. Ajay, do you have a preference as to how you would play defense, and how do you rationalize some of the valuations? Do you believe that a lot is left to execution? Is there enough margin of safety? It's probably a decadal theme, so it could well play out.
Yeah, it is a decadal theme. And if you saw the Shangri-La dialogues also, India spoke about a lot of import potential, especially of BrahMos missiles. Vietnam has picked up already. we have given to Philippines. We're looking at Indonesia. So the shipbuilders will do very well. That's an order of magnitude increase in the order books that are coming in. And a lot of East Asian countries are interested in our ship building capabilities. There will be an expansion. The missile makers will do well as well. There is a lot of demand for the Indian armaments, missiles. The weapon makers will do well. So overall, the world is in a remilitarization kind of a phase, and that will continue at least for the next decade. And India is well positioned to benefit from that internationally, plus for import substitution and satisfying our domestic rearmament push. So overall, positive on the sector. Valuations are not cheap, so you have to look at very closely. But I would say ship makers, the shipbuilders look the best amongst it, and then the missile makers.
Ajay, given the kind of strategic shifting which is happening in global warfare, do you think that it's all about smaller munitions and high mobility munitions rather than ships and others, because those are heavy and takes larger time, and as the warfare is shifting, it's all about small armaments?
Yeah, see, where you have to anchor is on China, and China has a huge lead of about 20, 25 years on the world in terms of its navy now, in terms of the sheer numbers. In terms of technology, the US is still the big navy in the world. So we are very small in comparison, and there is enough and more to go for all countries in terms of our order books keeping that. But you're very right, after Ukraine and what got seen in the Middle East war as well, it's going to be swarms of drones. It's going to be even seaborne drones, which Ukraine got the biggest warship of Russia down with seaborne drones. So that remains a very big change that has happened. India has reacted to that, and our drone manufacturers and all the companies which are suppliers into this we are seeing their revenues going really perpendicular. So that will happen, but you have to also build the traditional base. So we are still, for the size of our coastline and the power we want to project, our navy is still undersupplied, and especially given what Pakistan gets supplied from China and what China has on its own. So if India has to stand up to that, we need to have nuclear deterrence, which is there in nuclear submarines as a second strike capability. That will never go away. You will need to be a blue sea navy. So at least having 2 to 4 carriers which can project power much beyond the coast. I think those things will continue, and that is happening. We can argue that do you need fighter planes when you can have drones and missiles, but in the end, you need a very composite kind of an armed force, and we have a two-front war potentially at any time for India. So that is the planning that goes into it. So yes, it will change, but the traditional warfare will also continue. You will need to have that up your sleeve, and we are very undersupplied, be it in terms of fighter aircraft or be it in terms of the Navy being able to project the power.
Okay, I want to switch focus to some of the losers in trade. NHPC is one of those, 6% lower, that OFS creating a bit of a drag on the stock price. But now the OFS is fully subscribed. We'll have to now start looking at price, and maybe over the next hour or so we'll get a sense as to how that price evolves. But and we'll keep you updated on that, of course, viewers. But move on, that is one of those. And I'm very curious to know, Shivangi, what's the take with regard to Wockhardt? It's done so well. Today down 9%, top loser on the Nifty 500 basket. And is this essentially an opportunity to buy on the dip?
course, from the last two sessions, we've seen profit taking, but overall, this one has been laggard for a very long time, and then it escalated in the last 5 to 6 or trading sessions, and the gap up had to be filled in. So, of course, this was kind of a very volatile stock. But overall, I would suggest better names in the pharma and diagnostic space, which one could look at.
Ajay, some of the other sectors in today's trade, especially if you look at uh, autos, last 2 days we've seen some auto numbers coming in. PV has been mixed in that sense. Maruti was good, but CV, which was coming back into action, now again seeing some kind of headwinds.
Yeah, Sajid, what has happened on the CV side is the Gulf War has had an issue on the chemicals, the pigments, the downstream to the petchem kind of products. So right from plastics to all the supply chain, if you see, it has got very undersupplied. We've had an issue there, and the fleets are underutilized as a result. So we are seeing that on a very industry-wide basis. That is having an impact. I know a lot of fleet operators who have gone back to the banks and the NBFCs and tried to get a COVID era kind of workaround that our fleets are not getting utilized and very difficult for us to service those EMIs. And that is now coming through in terms of the actual demand for new trucks coming through, new commercial vehicles coming through. What normally in a scenario like this you would need is the government to step in with some counter-cyclical measures, the government to put in some huge orders on electric buses to change buses for most major cities, something like that could set the sector on fire. So you need some amount of government counter-cyclical measures coming in. Otherwise, there is a slowdown definitely in the segment, and it will be difficult for the CVs to recover, at least for the next 2 quarters. We are seeing a shortfall. Tractors, again, right now the farmers are well funded, but this monsoon and this crop will really determine how tractors do post, say, November, once the harvest is in, and we start seeing how the monsoon went and what the reservoir levels are for the next crop. So little delicate balancing act on tractors as well. These two will need watching.
Okay, these amine stocks, both Balaji as well as Alkyl, absolutely flying in trade. Shivangi, what's the take there? What's happening?
So Balaji Mines has actually caught my attention, and of course we've seen that this stock is quite up today. But overall, follow up is on the cards. The kind of volumes and the price conversion that we've seen today, and it has surpassed its previous hurdle zones as well of around about 2000 odd levels. So closing above those levels is a positive sign, and we could see the next of levels of 2100 in this one with a support near 1980.
Balaji, I see in terms of trading volumes, 5 times the 20-day average. So that's probably one of the reasons why that one is flying in trade. Even alkylamines is 4 times the 20-day average. So you're seeing very strong volume led or volume driven kind of a move in trade today. So you've seen a bit of a crack as well from the high, but it's still nearly 9% higher, alkylamines at this point. So you're seeing some decent moves on both of those. Chemicals, Ajay, would they interest you? Pharma is something that interests you, evergreen you call it. What about chemicals? Is the cycle turning?
Yeah, wait and watch yet. I think a cycle will turn, but we have had a lot of issues. In terms of supplies coming in, so it is turning. It is definitely turning, but one more quarter. we can wait one more quarter to see that it's durable. The whole issue is, how the Middle East situation gets worked out, and all supply chains have got very badly impacted by that. So companies are stretched. There is a requirement. Definitely, there is demand. The supply has been the issue. So it will come by. It will come by, but I would say wait one more quarter.
Force Motors, Shivangi, should you buy the dip?
Force Motors, actually, I would recommend a little wait and watch here. Some bit of more breakdown could be seen because it has broken the consolidative support of the last 12 weeks. So some bit of pressure might be prevailing here.
Ajay, crucial week where we've got the MPC outcome at some point of time. Just 3 minutes to close. I know I've got very, very short time to kind of get your view on this, but what's it likely to be, and how are you viewing it? We're expecting to see a weak monsoon. Much will be required from a policy boost perspective, but not enough ammo.
Yeah, and the supply shock, you can't do anything on a monetary sense. It has to be counter-cyclical fiscal policy that comes in. So they will wait and watch. It's still early. Your CPI is 3.48, but the WPI is 8.43. So clearly companies are hurting, but not able to pass it on to the consumer. That's what your numbers are showing. They will wait and watch and hope for the best. Policy will be more restrictive. So from neutral, it could move to restrictive, or they can hold on to neutral, increase the inflation forecast, reduce the GDP forecast, but rates stay on hold. And maybe in August, we get a 25 basis point hike. But right now, very muddled situation because it's a supply shock. It's not anything that changed in the economy. It's an imported inflation coming in, leading to a supply shock.
You spoke about lenders at the start of this show. When you came in, the first thing you spoke about was lenders. It's a good space to be, financials. Is there a risk given the possible weak monsoon that we're expected to see?
Yeah, there is a risk, especially on the rural lending. We'll have to see how bad is the monsoon. It's looking like a super El Nino, not even a 2023 type, but it could be worse. So we'll have to wait and watch. We will only know by August. By July end is when it sets in on the Pacific quite strongly. And by August, we will get an idea. And by September, there'll be clarity, which might be late. But it could impact rural demand and the rural surplus. Hopefully, the government will ready some kind of a package of, giving some relief into the rural segments. So I'm expecting that the government will hold its ammo and bring in something, but it will have an impact, definitely.
Okay, weak monsoon clearly likely to impact, and probably markets have already penciled some of that in. Ajay, Shivangi, I'm going to have to let you go. Thank you so much for coming.